Hello and welcome to this video. In this video, we're going to talk about the need for opening balances. We're going to be talking about what they are designed to do, why we need them in the first place, and a little insight into how we get them done for you. We're going to make this so that you can understand why an accountant may say to you that an opening balance journal is required or some opening balance haven't been done, whatever the phrase is going to be. And we want you to understand what that means by it. Stay tuned. Hello, my name is Aaron Patrick. I am a chartered accountant, a certified UK trainer with a fancy new logo, that QuickBooks Chap on the internet, and also head of accounts here at Boffix. Now, when an accountant is talking about opening balances, what they're talking about is making sure that whatever program or system you're using to do your bookkeeping, that they fall in line with what your statutory accounts are. So as a really crude example, if you're using, say, QuickBooks Online, which is our preferred method of doing bookkeeping, and don't forget we've got some nice little discount vouchers down below, get yourself involved in getting the nice cheap version of QuickBooks Online. But if you are using QuickBooks Online and you have some statutory accounts maybe done by an accountant, it doesn't necessarily mean that the figures that are in QuickBooks Online agree to what's actually happened over in your statutory account. See, what tends to happen is that when an accountant comes to file your tax return and your corporation tax return and file to Companies House, they're going to take what's in QuickBooks Online, they're going to extract that data, manipulate it, and then they're going to submit it based on what's actually true and proper. You see, the figures you have in QuickBooks Online may not be exactly correct to what needs to be submitted to Companies House, hence why you've got an accountant in the first place. So the tweaks and the adjustments that the accountant does, they may not necessarily do that directly in QuickBooks Online. They may do it in whatever software they're using to prepare your final accounts. Therefore, you might have a disconnect between your bookkeeping in your QuickBooks and what's been filed to Companies House. Let's have a crude example of what that means. So let's look at it and let's imagine that here we have two sets of data. This data over here represents what's in QuickBooks Online. And in this data, we've got your bank balance, we've got your debtors, and maybe we've got some creditors as well. And what really important for us is what's called your retained earnings. Now, these balances that are here may be based on what you knew. So at the time, it could be £1,000 in your bank, £500 worth of debtors, £200 of creditors, and a retained earnings maybe of 1,300. And from your management accounts, they're absolutely spot on, because for you, you've got everything you need to do. You understand what your debtors are, you understand what your creditors are, and you're happy with what's going on. And honestly, they're the most important figures because you understand them. When your accountant comes to do your accounts, though, they will use whatever their accounting system's going to be, and they'll create a set of data that's ultimately going to be submitted to both Companies House and to HMRC. And you've submitted these numbers to your accountant. Now, when your accountant's doing this work, maybe they agree that your bank should be £1,000. Maybe they're happy that you've got £500 worth of debtors, but actually when they look at your creditors, they actually think there's far more and there's £400 worth. And maybe they found some other adjustments as well, maybe some accruals, and there's got £200 there. And by the time they've gone through looking at that information, then actually they're down to only £900 of retained earnings. And again, your accountants put this together. They're using their knowledge, they're using their figures, they're trying to make everything look and be as proper as it can be, because at the end of the day, when you sign it and submit it to HMRC, that's you signing saying that's what you believe is right and correct in your accounts. Now, the retained earnings, for example, is really, really important, because that's how much money you got left over to pay dividends. That's going to be how much profit you made. Ultimately, that's where your tax bill is going to come from, because you know you're going to pay taxes on what profits you've earned. So that figure alone is going to be crucial, and we want to be making sure going forward that QuickBooks represents that. That's where opening balances come in. You see, in this example here, well, we know now that this figure needs to be changed. We know that this figure needs to be changed, and we know we've got to add in another figure as well. So it's almost like opening balance is a bit of a matching exercise. We go through and we say, yep, that one's correct, but unfortunately, these other three need to be adjusted. And the opening balance itself means that I'm going to have to add another £200 of creditors on. I'm going to put another £200 of adjustments here, which leaves me basically with £400 worth of adjustment against my retained earnings. And when I add those two together and I put that into QuickBooks, then I'm basically reinstating the QuickBooks figures. And what that's going to mean is I'm going to have £400 of creditors here, that £200 adjustment sat in QuickBooks, and then finally I'm going to have £900, which means then I can go through tick, tick and tick, bringing them in. So when people are telling you about these opening balance adjustments and putting these in everything else, in a simple terms, all we're doing is we're reinstating your QuickBooks figures and we're bringing them in, especially when you think about the dates involved. This date here could be the 31st of December 21, again 31st of the 12th 21. Now the time that you actually go and do your account, well, you've got 9 months and a bit to be able to post that. So maybe we're looking at this in the middle of June, for example. Then when we post this, we're going to retrospectively post back to the 31st of the 12th 21. And what we will do then is we'll make sure that this is posted, whatever the date is that we need to, but that could be whatever date we actually figure these out. So this could be the middle of June, we posting that, reinstating them back there, meaning that we're kind of bringing those numbers back into how it should be. And that's it, simple as that. Opening balance journals is basically us looking at what you did in your QuickBooks versus what we've submitted for you on account, making sure they agree to one another, making sure that we are showing exactly the right figures, so that next year when we do your account, everything all ties up correctly and beautifully. If you have any questions below about opening balances, or you want to go into a little bit more detail, let them know below. Or if you think that actually a more detailed version of this video would be useful, maybe where we do some live examples and we go through with them, let us know as well and we'll get them on there. My name's been Aaron Patrick. Hopefully this video has been useful for you. Let us know in the comments, like, share, subscribe, keep subscribed to this channel because we've got some great more tips coming your way to help you understand business a little bit more and hopefully make sure that you don't just survive, but you thrive. My name's been Aaron Patrick. It's been an absolute pleasure to do this video for you and I'll see you in the next video. Bye for now.